Inflation ticked up a little bit this week and the market is wound up, waiting on the Fed. What are they going to do next week? Let's take a look at it. Let's talk about it. Welcome back, everybody, to the MarketBeat preview for next week. We're going to take a look at what happened last week. Thomas, how are you today?
I'm doing good, Don. How are you?
Always good. The market last week, mixed, I'll call it. I think it slid a little bit on Friday due to triple witching, probably. But overall, the market was mixed by the end of the week. We've got a lot of things going on in the market that frankly have a lot of us perplexed, Thomas. And I want to speak to that a little bit. You wrote about it in your preview. We've got a lot of things happening that, for me and for a lot of people like me, should be taking the market down. A lot of catalysts coming out, a lot of news coming out. Inflation is hotter, oil prices are up, and yet the market seems to be just kind of holding its own. Can you speak to that a little bit?
Yeah, I think that we're still just kind of at the top of the summer rally. The fact that the recession that was supposed to happen this summer never came is, why we rallied all summer long. Right now, the market's trying to figure out what to do next. The recession didn't happen, but all the risks are still there, like you say. Right now, what I see in the charts is the market is just wound up at a top, kind of waiting to see what will happen. And I think this week could be a big mover for the market because we have the FOMC coming up. I think this is going to tell the market if it's a soft landing or not. The FOMC says the right things, the market could rally. But if they confirm that inflation is still a problem, like I think they will, I think the market will continue to confirm the top and it may even begin to move lower.
We've talked about this before, and I want to speak to it again. You mentioned the market's wound up. You wrote that in your preview this week, which I thought was a good way to put it, the market being wound up. And it feels like to me and to people that I talk to, if the Fed even gives a hint of being dovish rather than hawkish, we could be looking at a kind of release the Kraken kind of moment here where things could just take off. Would you agree with that?
Yeah, I think so. The market really wants to move higher. The economy has got some obvious momentum. The thing that's holding it back right now is the Fed shackles. If they release the shackles, it'll be like you say, release the Kraken. I mean, right now, the Atlanta Fed GDP Now tool shows that third quarter GDP is running about 5%. And we're doing that with interest rates at record high levels. So what's going to happen if rates go down?
Right. We've got another thing that we've talked about frequently, another factor, I should say, not a thing, that we need to consider. I don't know if you checked oil prices lately. I'm sure you did, because you're like me, you check them frequently. Oil is up to WTI, last I checked, was $93 a barrel. There's major news sources and people out there calling for it to hit $100 a barrel again by 2024. It's a big factor going forward with inflation as the Fed and whoever else wants to try and whip inflation. How big a factor is it, Thomas?
Well, you're talking about risk factors in the Fed and oil. I would say that the Fed is a trigger and oil is the risk. Right now, when inflation subsided, because oil prices subsided, but oil is back on the rise again. And this week's inflation data shows that inflation has begun to reaccelerate again. Since then, oil prices, like you said, broke out to new highs. They're above $92. They're going to continue to drive inflation. And that's the risk. So I think this week, with oil prices rising, the FOMC is going to come out with a clearly hawkish statement. They're not going to back off their statement. So I really don't see that release the Kraken event happening, even though it is kind of a possibility.
I know you pay attention to the Fed Watch tool. You said a hawkish statement, which is probably true. I don't see them backing off yet. But what chance do we have of market surprise this week? I think most people are calling for them to stay pat. But what are we looking at as far as percentage-wise of another rate hike this week?
Well, I think the percentage risk for a rate hike this week is very low, but I think the risk for a shocking surprise is very high because the market has not priced in a rate hike. This week, since inflation came in hot, the odds of another rate hike actually decreased. So I think the Fed will come out with a hawkish statement that will be more than what the market expects. Now, what the CME tool is showing is that there's not going to be any rate cuts until the middle of next year. And that is another significant change in the outlook. Rates were supposed to begin falling like this month or next month. And now we're looking at another 8 months or more of rates the way they are. That's going to have a serious impact on the economy.
We can get into this on another video, Thomas, but the political climate 8 months into the next year, or 8 months from now, is going to change significantly. So that's something to pay attention to as well. Just mark my words, politics is going to come into play first of next year. Absolutely. Hey, this week we've got earnings coming out. Well, some earnings coming out, but there's two in particular that I want to speak to that I think have some effect, or at least a factor into where the economy is heading. And those are FedEx and KB Homes. What are you expecting for FedEx, from FedEx? That's a big indicator, big bellwether for the economy. I think I read someplace where between UPS and FedEx, they touch 80% of the commerce in this country every day. So what are you looking at from FedEx for next week?
Well, yeah, FedEx is supposed to post a decline in earnings, or decline in revenue, I should say, and they're supposed to widen their margins. Earnings are supposed to improve. So the question really is how big a decline and how much of an improvement? But ultimately, the take from FedEx is going to be its bellwether status on the economy. How is the consumer doing? How is e-commerce looking? And what's the outlook for the winter? As far as KB Home, I expect to see a pretty solid report from KB Home. And this is kind of surprising. You'd think the home builders would be struggling more than they are, but the dynamics within the market continue to sustain their business. Lennar's results this week were pretty good. They beat on top and bottom line. They raised guidance. They're generating solid cash flow. They're repurchasing shares and paying down debt. I would be surprised if we don't see those exact same things in KB Homes this week.
You said home builders are surprising. I'm going to go out on a limb here. It's not surprising to me anymore, Thomas. You and I have talked about this, I think, since the spring. Rising interest rates should have had an effect. I understand that home builders have a backlog of work that they're drawing from, and I get all that, but it's really, really mind-boggling to watch. Like you said, Lennar came in with decent numbers. KB Homes will probably do the same. Home builders, they're just not surprising to me anymore.
Well, really, I think it's the rates that are doing it. I mean, there's so much demand and pent up demand for homes. And with rates so high, there's no existing inventory. So the only option is to buy a home. I mean, right now at the annualized pace of home building, it's going to take like 5 or 6 years to catch up. I mean, that's a pretty strong tailwind for the market.
All right, I'm going to put you on the spot here because this is one of my favorite things to do week to week.
Right.
What's the market going to do next week, in your opinion, up or down?
Well, it'll probably be flattish until Wednesday. Then it's going to be volatile. It's going to go up and down, probably 100 or 200 basis points at least in both directions after the policy statement. And then after that, it just depends on what they say. But as a betting man on the market, I would say the market's probably going to fall by the end of the week.
There you have it, folks. I want you to do us a favor. Comment down below if Thomas is right or wrong. Let him have it. We look forward to your comments. We answer each and every single one. If this video has done anything to help you, or you liked it, we would appreciate a thumbs up, even a subscribe if we've earned that. But we'll be keeping track of what goes on in the market for you next week. Thomas will be writing about it all week on MarketBeat, and we invite you to check those articles out. Thomas, until then,
remember the trend.